So winter is coming and once again the EU is freaking out. As the West moves to isolate Russia, Putin, he's making his own counter-move to clobber Europe's economies. At the heart of this is Russian energy once again. This might surprise you, but the EU still relies on oil and gas supplies from Russia to survive. Yes, despite the rhetoric, the EU still bought over $1 billion a month of fossil fuels from Putin last year. It's substantially lower but still a significant amount of revenue for Russia. In natural gas alone, we can see the hypocrisy and dependence. The EU brought in 13 billion cubic meters of gas from Russia. That's much more than US LNG and easily double the gas supply from the UK. In total, almost 20% of Europe's supply comes from Russia. The rest of the supply comes from expensive sources, especially LNG. And that's 25% of the bloc's energy supply. Why do you think they are deindustrializing? If Putin decides to weaponize natural gas, it would damage the EU economy. The layoffs in Volkswagen would just be a prelude to something even worse, and more heavy industries will collapse. Now, Europe needs Russian gas, but they are playing hardball. They don't want to pay money for gas supplies, and it's no surprise that Russia turned off the taps. Gazprom, which is the Russian gas supplier, has cut off gas supplies to Austria 2 days ago. This is horrific for Austria because their dependence on Russian energy is over 90%. The country is now approaching a world of hurt the longer this disruption continues. Von der Leyen, of course, is in panic mode. According to Brussels, Putin is trying to blackmail Austria and Europe. He's using energy as a weapon to corner the Europeans. But what's fascinating is her saying that Europe is prepared for this. Gas storage across the EU is full, and the bloc won't freeze from Russia shutting down supply. But we must analyze her claim to understand why she's off the mark. If Russia really cuts away gas supply, Europe is still not prepared for it. There will be huge economic damage across the member states. If we look at gas storage levels in Europe, major economies in the EU will likely be fine. Their storage levels have never been higher. Germany is at 96% storage capacity. France is at 92% and Italy is at 97%. So they won't freeze in winter. There will still be energy for heating and lighting. The only country at extreme risk of a cutoff would be Ukraine. Their storage is only at 26%, which kind of tells you how critical the situation is at the front lines. The problem with the storage argument alone is Europe's existing gas demand. Firstly, you need to refill the storage sooner or later. You can't drain everything. And when it comes time to refill, there's no guarantee prices will be cheaper tomorrow versus today. And there's also the big issue of replacing the Russian supply. Von der Leyen has made it very clear that the number one alternative, number one at the top of her list, is US LNG. She wants to replace cheap gas with liquefied fuel halfway across the world, across the Atlantic Ocean.
It's the whole topic of LNG. We still get a lot of LNG via Russia, from Russia. And why not replace it by American LNG, which is cheaper for us and brings down our energy prices, but it's something where we can get into a discussion, also what our trade deficit is concerned. So engage, look at common interest, and then negotiate.
Now, I have no idea how US LNG can be cheaper than the Russian supply that's just next door. If you replace pipeline gas from Russia with LNG from the US, you will pay more. While it's true that the US is the world's biggest gas exporter to the world, LNG is very inefficient. You are deliberately extending the supply chain using very expensive vessels. LNG sold to Europe can cost almost 4 times more than domestic prices in the US. And this means at the end of the day, the EU could be paying 30 to 40% higher for US gas supply versus Russia. It just doesn't make sense here. Remember the horrible state of EU industries. Automakers are collapsing. Germany wants to build up their own semiconductor industries there, but it's not going to work. There's a reason why companies like BYD and even Intel, they've frozen their EU expansion plans. You can't manufacture there competitively anymore. The cost of energy is just too high. But let's understand how this Austrian gas shutdown even started. Is extremely bizarre. So here's what happened. Austria's national energy company, OMV, sued Gazprom for unfulfilled deliveries to their unit in Germany. Austria decided to recover their $240 million in damages, and to do this, they would not pay Russia for some of their gas supplies, basically getting free gas to offset the claims. And of course, Gazprom doesn't want to play this game, so they cut off supplies to Austria, and in a sense, it might be a self-inflicted wound by the EU. This is the chain of events, and when you think about it, you kind of realize that it's quite ridiculous. And now Austria has to scramble to replace their huge dependency on Russian energy. Drawing down their reserves isn't a lasting solution here. Almost immediately, the price of EU gas spiked by 3% to the highest level in a year. Everyone knows that Europe is now in distress, so global suppliers, they're going to take their pound of flesh. They will jack prices up even higher. This just reinforces Europe's deindustrialization. Trying to cut away cheap energy is impossible, especially when a US trade war is coming. And China's industries, they're grabbing more and more market share. We just need to look at the situation more closely. Even though Gazprom cut Austria away, more EU buyers are lining up for Russian supply. They are stepping in to get more Russian gas for themselves, and this is probably what they are thinking. We'll grab the gas meant for Austria for our own economies, or we'll buy it first and resell it to Austria at a higher markup. And this is basically how global supply chains work. If you cut off one buyer, there will still be loads of demand around the world. Gas is not some luxury product, it's an essential commodity countries need to run their industries. But let's shift focus to the semiconductor war here. It's really interesting. And let's travel all the way to Taiwan because something big is happening there. While Trump won the elections, Biden is still president until 2025. So the same actors, Blinken, Sullivan, and Raimondo, they're still in control. Let's not forget that. And the chip war with China has now reached a dangerous escalation point. Because of US sanctions, the world's biggest chip maker, TSMC, is forced to ban China. TSMC is closing down production of AI chips for Beijing. They are complying with the Americans to restrict China's access to advanced semiconductors. And it kind of seems that when the US tells you to jump, you have to ask how high. And a big shout out to our sponsor today, Indigo Precious Metals. When it comes to buying gold and silver, I trust Indigo Precious Metals in Singapore. They have made investing in precious metals safe, fast, easy, and simple for both small and large scale buying. I've been stacking gold for over a decade now, and I've learned two things when buying. You want to buy authentic gold bullion, and you want to buy it at the lowest premium possible to stretch your dollars even further. And I'm glad to say I found both of this at Indigo Precious Metals. Indigo Precious Metals is a leading retailer in Singapore. They specialize in physical gold, silver, and platinum. They are my one-stop shop when it comes to buying bullion. Their prices are sharp, and they have the best brands on sale, and I can test the gold on the spot. So if you're looking to make your first gold purchase, Indigo Precious Metals is the best place to start. Whether it's 1 ounce or 1 kilo, this is the reputable dealer you are looking for. So take action today. Click on the link below and enjoy a discount on your first purchase with the code SeanFu. Start your gold stacking journey today. The company told their Chinese customers they would no longer manufacture AI chips of 7 nanometers or smaller. As of last week, Chinese orders are no longer being produced in TSMC. Future supplies of such semiconductors will be subject to approval, and this will very likely involve Washington, the Trump administration. And looking at the lineup of Trump's cabinet like Marco Rubio, we kind of know the containment of China isn't over. It's still the game plan. In the short term, this really puts Chinese tech in a quandary. You have multiple Chinese companies, including Alibaba, that relies on TSMC's production. They make the designs and they send them over to Taiwan to manufacture the chips. So some progress will be halted in China's AI advancement. Now, we've heard multiple times that Beijing is way behind the 8 ball when it comes to advanced chips. But there's no smoke without fire. There's a reason why Biden is hammering away at global supply chains to China.
Here's a chart put together by the Blair Institute of the server installation base by country. How many servers every country has installed. And what you find is that there are two leaders by far. First, the United States, far out in front of the pack. Second, China, clearly in second place, but also clearly ahead of the rest. And it's no surprise, looking at charts like this, that there are also two countries that are setting the terms of the race to build AI systems. These are the countries that have access to the extraordinary volumes of computing power that are needed to train AI systems. And these are the countries that are competing right now to gain access to the cutting-edge chips that advance AI training.
This is why the US is afraid of China. According to Chris Miller, who wrote The Chip Wars, China is the second most advanced country in the AI tech race. It's important to realize that the immediate effects of the Taiwan ban, this will force China to double down and accelerate the advancements of AI chips. This is going to lead to an eventual disengagement with TSMC and further decoupling with China. The company is going to become the main supplier of chips to the West. In Q3, 11% of TSMC's revenue comes from China. It's a significant amount of money that's now under threat. We can expect this to continue dwindling down as the US continues to block Taiwanese exports to China. The US game plan has always been to maintain a technology lead, to isolate China from global supply chains, and leave Beijing a few generations behind in chips. Now the stakes are incredibly high. The West is afraid of China taking over the chip industries like how they did with electric vehicles. In Q1 last year, TSMC made almost $17 billion in revenue, and that's almost 70% of chip earnings across global foundries. In contrast, China only accounts for 7% at around $1.7 billion, but they aren't exactly far behind the US either. AMD, Nvidia, and Apple, they all rely on TSMC for their chip production needs, and the cost per unit is much higher than legacy chips. So Beijing has to climb the value chain here to compete. And Chinese engineers, they are running very hard. Together with their army of scientists, they are beginning to make breakthroughs in advanced chip production. SMEE, which produces chip-making gear, has filed a patent for EUV or extreme ultraviolet lithography machines. It's a big step towards catching up with industry leaders like ASML. China is still stuck at the 28nm level of production, but if this patent gets approved and it works, China can swiftly advance towards 7nm chips and better. And we know China has economies of scale. Once they produce advanced AI chips, it's game over for the West. Even TSMC would be in trouble. They'll be the exact same position as Volkswagen is today. Chinese chip foundries will swoop in and they'll lower the cost of production. They will flood the world with affordable AI chips and grab market share. Now, in warfare, quantity has a quality of its own. What China lacks today, they have enough people to push the ball forward. Global chip patent applications have gone up 22% globally to 81,000. However, China is leading the patent race. They have filed over 46,000 patents, and that's for a 42% rise from the year before. Over half of new semiconductor ideas are coming from China, and this should be very frightening to the US. Drilling deeper into the figures, we can see a disturbing pattern forming. Just 4 years ago, the US and China were on par with patent applications, but today Chinese engineers are filing twice as many semiconductor ideas as their peers in the US. With Trump coming back into office, he might just dismantle the CHIPS Act. He could take Biden's idea, Biden's plan, and just toss it into the bin. And this means Beijing could pull ahead in research and development even faster than before. So guys, it's just a matter of time before China develops their own advanced chips. TSMC's ban will hurt for sure, but the blowback effects are equally deadly. Chinese companies will innovate faster and they'll innovate harder. But let me know what you think. Can Europe ever escape their dependence on Russian gas? Can China bridge the gap and win the chip war? Let me know in the comments below. Stay safe, be sure to smash the like button and subscribe as we navigate through these crazy times.